This is Satya Pratiman of Cirrus Research. The latest issue of our signals report is just out. This is a report that centers on all of our asset allocation tactical tools. The title, Rotational Market with Crowding and Tail Risk Building. At the heart of this is that this year we've really been slammed by very volatile markets. A lot of this fundamentally has been driven by the tariff impasse that has surfaced. That said, going into this year, we had a speculative run that allowed a very narrow market to get to even more extremes. This model on crowding went red at the end of January. As the market corrected, it went back to neutral. And then with the relief rally, this model has now, in fact, gone back into a very crowded terrain. The bottom line is that momentum factors tend to come under pressure when everyone is already crowded in to the leadership stocks. This is an example of the signal back in January as we got the weakness, and then the subsequent 3-month performance shows that not only were markets down, but we also had leadership stocks break hard. So at the heart of our concern is this idea that market crowding has come back into the fold. We use the term rotational market because to some degree, some of the fundamentals aren't as dark, and yet there is a massive fundamental overhang. A couple of other things we're watching. So for instance, our risk appetite reading, that reading has started to get frothier, but to be quite frank, it could become even more extreme before that starts to spell trouble. So to some degree, we've gotten this sort of like embrace of a pro-risk profile. The fundamentals haven't broken hard, and what this is saying is that risk appetites could climb even higher. In addition to that, our asset allocation model remains equity overweight, albeit not as high as it was, let's say, a year ago, but nonetheless a longer-term overweight. What this is saying is that while risk assets are still favorable, we could quite conceivably see a rotational market, potentially with lower absolute returns, but nonetheless favorable. And then finally, our style oscillator remains in this lean value outlook. In other words, if we get into a world where interest rate risk remains dominant, then valuations are going to matter even more. That is rotational, that is a lower returns market. Take a look at the full report, and as always, if you've got any questions, please reach out to us. Thank you.